So AAA, Advanced Audit and Assurance.
Yes, sir.
Until now, we have covered some auditing standards.
Yes.
Let's see what we have covered in now. So we have covered ISA 320,
Yes.
materiality, qualitative materiality.
Yes.
We have covered ISA 700, standard worded unmodified report and its
Yes.
contents.
Yes, sir.
We have covered ISA 705, qualified report in case of disagreement with the management or in case of inability to obtain sufficient appropriate audit evidence.
Yes.
We have covered ISA 706,
Yes.
faces of matter and other matter paragraph.
Yes.
We have covered ISA 701, communicating a key audit matter
Yes.
in the audit report.
Yes.
Along with, we have also covered ISA 720, other information in the annual reports.
Yes.
The other information paragraph in the audit report as well. We have also covered ISA 500, audit evidence. So these auditing standard we have covered so far. Now we're gonna discuss two more standards, and then we will move towards further question on audit report. Along with these standards, we have covered two questions. One question we have covered MAR
Yes.
from June 14 paper,
Yes.
and other question we have covered SNIPE.
Snipe.
I think it's from June 11 or 12 paper. So two
Yes.
questions we have covered, and these 7 auditing standards we have covered.
Yes.
Now we are moving towards another auditing standard, ISA 580. ISA 580 called written representation.
Okay.
As per ISA 500 and ISA 700, auditors shall obtain sufficient appropriate audit evidence before expressing the opinion. I mean, without opinion, we should not express any opinion. Before expressing the opinion, we shall obtain sufficient appropriate audit evidence. But there are some accounting matters in the financial statements. There are some areas in the financial statements about which we are unable to obtain sufficient evidence. Sufficiently quantity. Quantity means enough. Like throughout the audit, we should seek more and more evidence. We should not rely on the evidence we have obtained. But there are some accounting matters in the financial statements about which we are unable to obtain sufficient evidence. So to make the evidence sufficient, what we do? We need evidence from company management. We ask the company management, please write down on this page that this account figure is accurate and according to standard you have presented properly, and that page we are taking from management that will be included into our evidence. This page that we are requiring from management as a evidence is called written representation. So to make the audit evidence sufficient, we require written representation from management regarding some accounting matters, some accounting issues to make the evidence as sufficient. So who is requiring this written representation from whom? Auditor requiring this written representation from company management. So who is providing this evidence? Company management.
Yeah.
Who is providing this evidence? Company management. But interestingly, though this evidence is provided by the management, but its wording is designed by the auditor.
Okay. So provide by management, wording by auditor.
We require sometimes written representation from management.
Yeah.
But interestingly, this evidence is provided by the management to the auditor, but its wording is designed by the auditor.
Okay.
If we have written representation as well as other evidence, mean we should not rely on wholly solely on written representation, we should always obtain corroborative evidence.
Okay.
Corroborative evidence mean extra supporting evidence. Corroborative evidence mean extra supporting evidence. We should not only rely on written representation, we should always obtain corroborative evidence. What is meant by corroborative evidence? Extra supporting evidence. Extra supporting evidence means evidence obtained through our auditor on work.
Corroborative.
If we are having corroborative evidence and that are not sufficient, we ask the management to provide representation and management have provided representation. This means we are having sufficient evidence. Now we can express any opinion either in favor of the company mean unqualified or against the company mean qualified.
Okay.
If we are having both evidence, corroborative as well as representation, then we will be having sufficient evidence. If we are having corroborative evidence, but the management refuse to provide written representation, do we have sufficient evidence? No. In that case, we will qualify our audit report due to scope limitation with inability to obtain sufficient evidence. If we are having both evidence, corroborative and representation, this means we are having enough sufficient evidence, we can express any opinion. But if we are having corroborative evidence, mean our own evidence, but those are not sufficient. So to make them sufficient, we ask the management to provide written representation, but they refused. In that case, we will qualify the audit opinion due to scope limitation. On its own, written representation is not a sufficient evidence. If management have provided written representation, but we don't have corroborative evidence, this means this written representation on its own is not sufficient. So we will again qualify audit report due to scope limitation.
Okay.
If we are having both, we are having sufficient evidence. If we are having corroborative, but management refused to provide representation, it's scope limitation. If management have provided representation, but we are unable to obtain corroborative evidence, there is scope limitation.
Okay.
If management has provided representation and we are also having corroborative evidence, but they are contradicting with each other. Mean management representation showing something different while our corroborative evidence proving something different. Who is accurate? Who is correct? No one. In that case, also we will qualify the audit report due to scope limitation.
Because scope limitation.
Alone, these are not sufficient. If they are sufficient, we don't need representation, but alone, these are not sufficient. And if management have provided representation, but that is different, that is contradicting with the corroborative evidence, means corroborative evidence saying something different, written presentation showing something different, who is accurate? Both on its own are not sufficient that we can rely on. So if both are having contradicting with each other, even in that case, there will be scope limitation and we will qualify the audit report due to inability to obtain sufficient appropriate audit evidence. Is that fine?
Yes, sir.
So as per ISA 500, auditors shall obtain sufficient appropriate audit evidence before expressing the opinion.
Yeah.
But there are some accounting matters in the financial statements for which we are unable to obtain sufficient evidence. So to make the audit evidence sufficient, we require written presentation from management.
Okay.
But on its own, written presentation is not sufficient evidence. We should always seek a corroborative evidence. If we are having corroborative evidence, management have provided representation, this means we are having sufficient evidence, we can express opinion. There is no scope limitation.
Okay.
If we are having corroborative evidence, we ask the management to provide representation, but they refused. So there is a scope limitation, we can qualify our report.
Okay.
If management provided written representation, but we are unable to obtain corroborative evidence on its own, representation is not sufficient, so scope limitation, we will qualify the audit.
Okay.
If we are having corroborative evidence, management also has provided written representation, but these both are contradicting each other. Again, there is a scope limitation, we will qualify the audit report. If these both are same, then we can issue an opinion either in favor or against. Is it fine?
Yes.
So who is providing written representation to whom? Company management providing written representation as an extra evidence to auditor, but interestingly, its wording is designed by the auditor.
Auditor.
So management can refuse to provide written representation, it can refuse to sign the representation. Might be they are not agreeing with the wording. So if management do not provide representation, mean refuse to sign written representation, what should be our action? We will convince the management with alternative wording. Might be this wording is not liked by management. But if they refuse instead of alternative wording, then we will consider it scope limitation and we will qualify the audit. Or before qualifying the audit report, we will try to manage with the management. We will try to explain like this evidence is important for us. If you are not providing evidence, there will be scope limitation. Or we can ask management, okay, do not provide us this in written form. You can discuss this matter in your board meeting. We will attend the board meeting and we will prepare the minutes of the meeting and that we will take as evidence. Even management is not allowing us to attend a board meeting, then we will qualify the audit report based on the scope limitation.
Okay.
If we are insisting the management to provide representation either through alternative wording or by orally discussion and we will take the minutes of the meeting, but management is still refusing, this means there are some doubts about management integrity. And if there are any doubts about management integrity, we should consider withdraw, mean resign from the audit instead of issuing qualified report.
Okay.
So if management refuse to provide representation, what the auditor should do? He should agree management with alternative wording. If they do not agree, we should convince the management that this is important matter from audit point of view. Otherwise, there will be scope limitation. Might be they can understand your point of view. If they don't agree still, we'll ask the management, please discuss these matters in your board meeting. We will attend the board meeting and we take the minutes as evidence. But even if they don't agree, either we should qualify the audit report due to scope limitation, or if we consider management integrity is doubtful, then we should consider withdraw from the engagement instead of issuing qualified report. Is that fine?
Okay, sir.
So there are some account balance in the financial statements about which we need to require written representation. What are those matters about which we need written representation for our management? There are two types of matters. One is called matters known only to management. And other is called matters involving estimate, judgment in measurement.
So matters known only to management, matters
And matters involving judgment, estimate in measurement. So against what matters we require written representation, there are two types of matters.
Okay.
Matters known only to management and matters involving estimate, judgment in measurement. So against these two types of matters, we require written representation. What do you mean by matters known only to management? There are some matters in the
Confidential
financial
matters.
statements that only company management know about.
Yeah. Which is confidential.
Because there are some lack of records about those matters.
Yes.
If management don't record those matters, ultimately we will not be able to identify those matters. So
Yes.
for those matters, we require written representation from management at the end of every audit. These are the matters against which we require compulsory written representation from management at the end of every audit. What are those matters? Matters known only to management. Those matters are called management overall responsibilities. At the end of every audit, we should require a written representation from management. Please sign on this page that management has fulfilled their duties in preparation of financial statements. Means they have prepared financial statements as per applicable financial reporting framework. Please sign on this page that all the information relevant to audit and all the records access has been provided to the auditor. And please sign on this page that all the transactions recorded in the financial statements are accurate. Means there is no material misstatement in the financial statement. So this is compulsory written representation that we should require at the end of every audit regarding management responsibilities. What are management responsibilities? Preparation of financial statement, providing information and access to records to the auditor for audit purpose, and recording all transactions in the financial statement. At the end of every audit, we should also require from management a compulsory representation regarding the assumptions and estimates. Please sign on this page. If there are any assumptions or accounting estimate in the financial statements, they are reasonable. We should require representation regarding the reasonableness of assumptions and accounting estimates. At the end of every audit, we should require a compulsory representation regarding the related party transactions. We will ask the management, please sign on this page that all the related parties and transaction with the related parties has been disclosed to the auditor as well into the financial statement. Along with these three, at the end of every audit, we should also require a written presentation from management regarding subsequent events as per ISA 560. Please sign on this page that all subsequent events occurred after the financial statement date has been adjusted as well as disclosed into the financial statement. Been adjusted, events have been adjusted and non-adjusted have been disclosed into the financial statement. Who require this representation? ISA 560. Regarding related party, who says this written presentation must be obtained at the end of every audit? ISA 550 says. And regarding estimate, who says you should obtain this representation? ISA 540 says. And these standards will be learned in future 540, 550, and 560.
560. Okay, sir.
At the end of every audit, we must always require a written presentation from management regarding the immaterial misstatement for ISA 450. Please sign on this page. If there are any misstatement in the financial statements and that are uncorrected, that are not material, mean immaterial.
Immaterial.
We will ask the management. Please sign this page that all uncorrected misstatements in financial statements are not material. And regarding fraud, we should also require a written presentation from management at the end of every audit that all fraud happens into the company has been corrected as well as disclosed in the financial statement.
Okay, sir.
So these are the matters known only to management. And we require written representation at the end of every audit. What are matters known only to management regarding management responsibilities? Reasonableness of assumptions and estimates, disclosure of related party and related party transaction to the auditor and in the financial statement. All adjusted events has been adjusted and non-adjusted events has been disclosed. The uncorrected misstatements in the financial statements are not material. All fraud occurred has been disclosed to the auditor as well as corrected and disclosed in the financial statement.
Okay.
Along with, we should also require a written presentation from management, that is, if there is any non-compliance with laws and regulations that has been disclosed to the auditor as well as in the financial statement. And we will also require a written presentation at the end of audit regarding litigation, like if there is any litigation claims against the company that has been disclosed to the auditor as well as disclosed in the financial statement.
Okay.
So normally we require written presentation regarding two types of matters, matters known only to management and matters involving estimate, judgment in measurement. What are matters known only to management? Management responsibilities. Non-compliance with the laws and regulation. NOC, non-compliance with laws and regulation, NOCLAR. Regarding fraud. Regarding the related party transactions. Regarding the estimate. Regarding the subsequent event. And regarding litigations.
Litigation.
So these are the matters known only to management, because if they haven't recorded into the financial statements, we cannot verify whether they have been accounted for properly or not. That's why at the end of every audit, we require these representation from management separate, because these are the matters known only to management. And there are some matters in the financial statements that involving estimate and judgment in their measurement. What are the matters involving estimate and judgment in their measurement, whose figure is based on management estimate and judgment? Depreciation and provisions. Provision, like the company has provided a warranty to its customers. This means there are chances of a future economic outflow, mean warranty claims that company need to pay. This means company need to create provision for the warranty claims. By how much amount? Company should create warranty provisions. It is based on management estimate judgment. As per IAS 16, company should depreciate their asset over its remaining useful life. How much is the useful life of the asset? Who will determine? That is based on estimate and judgment of management. If we are having sufficient evidence regarding these two matters, then no need to take written representation. But normally, we don't have sufficient evidence regarding depreciation rate, depreciation method, or useful life, or provision amount. So we require written representation from management to make the evidence sufficient. So if I sum up this standard, during audit, there are some account issues, account balances against whom we are unable to obtain sufficient evidence. So to make evidence sufficient, we require an extra evidence from management called written representation. But on its own, written representation is not sufficient evidence. We should always seek corroborative evidence. Make extra supporting evidence through our procedure as well. If we are having corroborative evidence, but those are not sufficient, to make them sufficient, we require written representation from management, but management refused to provide it. We will qualify the audit report due to scope limitation. If management has provided written representation, but we don't have corroborative evidence, Again, there is a scope limitation. We will qualify the audit report. If we are having misrepresentation as well as probability of evidence, and they both contradicting with each other, who is accurate? We cannot identify because on its own, both are not sufficient. Even in that case, we will qualify the audit report due to scope limitation. We require representation regarding two types of matters. Matters not only to management and matters involving estimate and judgment intelligence. What are the matters known to only to management? There are some matters that if not recorded properly, we are unable to check them. That's why at the end of every audit, we require compulsory representation regarding matters known only to management. What are those matters? Management responsibilities like financial statements preparation is the responsibility of management. Providing all information to the auditor for audit purpose and providing access to record for audit purpose is the responsibility of management. So we ask the management, please assign this page. Like you are responsible for preparing financial statements as per accounting standard. You have provided all the information related to audit and access to records for audit purpose to the auditor. At the end of audit, we require written presentation regarding non-compliance with law regulation. We will ask the management, please sign this page that all non-compliance with the law regulation has been disclosed to the auditor as well as disclosed in the financial statement.
Okay.
At the end of audit, we should require written presentation regarding fraud. Please assign this page if there is any fraud occurred that has been disclosed to the auditor and corrected as well as disclosed into the financial statement. We require representation regarding the related parties, transactions, and relationship. We will ask the management, please sign this page that all the related party relationships and transaction with the related party has been disclosed to the auditor as well as into the financial statement. We will ask the management, please sign this page if there is any estimate, any assumptions made while preparing financial statements, those are reasonable. We will ask the management, please sign this page if there are any adjusting events that has been adjusted and any non-adjusting events have been disclosed in the financial statements per IAS 10. And we will ask the management, please sign this page if there are any litigations or litigation claims against the company that has been disclosed to the auditor as well as in the financial statement.
Okay.
Not only ISA 580 says we should require written presentation regarding these matters. There are different standards like on NAC law, there is a standard called ISA 250 that we learn in future.
Okay.
On fraud, there is a standard called ISA 240 that we will learn in future.
Okay.
On related party, there is a standard ISA 550 that we will learn in future. On estimate, there is a standard ISA 450. On subsequent event, there is a standard ISA 560 that we will learn in future.
Okay, sir.
These standards also require we should obtain compulsory written representation at the end of audit regarding this matter.
Okay, sir.
If management refuse to provide written representation, what are the auditor actions? What auditor should do? He should try to agree the management with alternative verdict. First, we should agree the management with alternative verdict.
Yeah.
Might be that verdict is not liked by the management. If still they refuse, we will discuss importance of the matter with the management. Like if you don't provide, we will qualify the audit report. Still, if they don't agree, we will ask them to provide oral evidence by discussion during board meeting, and we will take the minutes of meeting as evidence. Still, they don't provide, we have two options, either qualified report due to scope limitation, or if we consider management integrity is doubtful, we can withdraw from the engagement.
Yes, sir.
Is a fine. This standard is completely wrong.
Okay.
Now we are moving towards another auditing standards, ISA 570, auditors responsibilities relating to going concern. What is meant by going concern?
The going of the company, the moving of the company.
Going concern means that company will continue its business in the next foreseeable future.
Yes.
Next foreseeable future means next at least 12 months.
Yes.
Who should prepare the financial statements? Company management.
Okay.
So regarding the going concern, there are some management responsibilities. And there are some auditors' responsibilities.
Okay.
What is management responsibilities? The company management should assess going concern, mean company ability to continue as a going concern. Mean every year, company management should assess company ability to continue as a going concern.
Okay.
And for IAS 1, they should prepare financial statements on going concern basis. If company is going concern, mean they should prepare normal financial statement. If company is going concern, for IAS 1, they should prepare normal financial statement. Normal financial statements also called prepare financial statements on going concern basis.
Okay.
Mean show non-current assets, then current assets, then equity, long-term liabilities, current liabilities, like that.
Okay.
But IAS 1 says, if company is not going concern, the company management should prepare financial statements on breakup basis. On breakup basis. Breakup basis also called liquidation basis. It is also called realization basis. So for IAS 1, it is the responsibility of management that they should assess the company ability to continue as a going concern. And if their assessment showing the company is going concern, then they should prepare financial statements on going concern basis mean normal. But if their assessment showing company is not going concern, mean company will shut down its operation within a year, it will not continue more than 12 months, then they should prepare financial statements on a breakup basis, not normal. What is a breakup basis? To show all non-current assets as current.
Okay.
Show non-current assets as current assets. Because your non-current assets will not provide you benefit for more than 1 year. And those assets who provide you benefit are who will be settled within 1 year should be treated as current asset. So if company is not going concern, the company will shut its operation within 12 months. This means these non-current assets will not gonna work till more than 1 year. So show all non-current assets as current year and show all long-term liabilities as current liabilities.
Okay.
This is called breakup basis. Also called realization basis or liquidation basis.
Liquidation. Okay.
So these are the responsibilities of management. They should assess company ability to continue as going concern and prepare financial statements on going concern basis if company is going concern, and prepare financial statements on breakup basis if company is not a going concern. IAS 1 also says if company is having cash flow issues, if company is having cash flow issues, that must be disclosed in the financial statement. If company management has assessed going concern ability and they consider company can continue its business more than 12 months, but company is having some cash flow issues that we can resolve within a year. Company will continue its business after 1 year, but there are some cash flow issues that we can resolve within 1 year. If there are any cash flow issues, there should be a disclosure in the financial statements who require this IAS 1. This cash flow issues is also called material uncertainty.
Material uncertainty.
If management consider there is a material uncertainty, mean there is cash flow issue, but company is going concern, then that material uncertainty mean cash flow issues should be disclosed in the financial statements, where it should be disclosed in notes to the accounts. Can you understand this point?
Yes.
We are discussing about management responsibility. Who should prepare financial statements? Management.
Management.
If management is responsible to prepare financial statements, who should follow the accounting standard? Company management.
Yes.
So as per IAS 1, management should assess the company's ability to continue as a going concern. If their assessment showing company is a going concern, they should prepare financial statements on going concern basis. If their assessment showing company is not going concern, they should prepare financial statements on breakup basis.
Breakup basis or liquidation.
But if their assessment showing company is going concern, but there are some cash flow issues, they must disclose that cash flow issues in a financial statement.
Okay. Okay.
And the
Yes.
other name of cash flow issue is material uncertainty. Existed.
Okay.
Material uncertainty existed mean there is cash flow issue.
Okay.
That can be resolved within a year and company will continue its operation after a year.
Okay.
Is that fine?
Yes.
What is the auditor's responsibility relating to going concern? Auditor having responsibility per ISA 570. Who should follow the auditing standard? Auditor, not the company management. Who is conducting the auditor? Auditor. So he should follow international standard of auditing. As per ISA 570, auditor is having responsibility to evaluate management assessment of going concern. Who should assess the going concern assumption? Management.
Yes.
What the auditor need to do? He should
Evaluate.
Evaluate the management assessment of going concern, whether management assessment of going concern is accurate or not. If management assessment showing the company is going concern, auditor should evaluate, yes, company is going concern. If management assessment showing company is not going concern, auditor should check, but yes, company is not going concern. If management assessment showing there is a material uncertainty in cash flow issue, but company is going concern, auditor should check, yes, there is cash flow issue, there is no going concern issue.
Okay.
So what management should do, they should assess the going concern assumption of the company. What auditor should do, they should not assess, they should evaluate management assessment of going concern.
Yes.
If auditor is having doubt regarding going concern, auditor consider company is not going concern. While management saying company is going concern or there is any cash flow issue, but auditor consider company is not going concern, then auditor should obtain some evidence regarding going concern.
Okay.
What are the evidence that auditor should obtain? Auditor should obtain cash flow profit projection for the next foreseeable future. Our auditor should perform some procedures. What are the procedures? Auditor should analyze cash flow forecast for next foreseeable future. So what is the procedure? Analyze or inspect cash flow forecast for next foreseeable future. We will ask the management, please prepare your cash flow forecast for next 12 months. and we will analyze whether management forecast is showing any chance of recovery in future or not. If auditor is having doubt about going concern, but management is saying company is going concern, auditor should analyze latest interim accounts. What are the interim accounts? Also called management accounts. Management accounts mean budgets of the company.
Okay.
Whether companies planned budgets showing any improvement in future or not. If auditor is having doubt about going concern, but company management is saying the company is going concern, auditor should reading the loan agreement whether there are no chances of becoming insolvent. Means if there are any loan repayments due, company is able to pay the payments in coming days. To see, yes, company is going concern. To prove management assumption that company is going concern. Auditor should read the board minutes, meeting minutes of those chartered governors of management to see how management is considering this going concern issue during their discussion.
Okay.
Auditor should consult any legal inquiries with the management. If a company is facing some legal cases, the auditor should inquire those because there could be some chances of going concern.
Okay.
Auditor should evaluate the customer order book in post year end period. What is post year end period?
Cost
After
here.
year end. Whether company is receiving big order from the customer, yes, there are chances that company can recover these issues. If company is not receiving big order from the customer, mean there is going to sanction.
Okay.
Auditor should check the company correspondence with the supplier, like they agree to provide the stock on a credit basis, because if company is having cash flow issues, going some issues, might be supplier refuse to provide a stock on credit, and this can further surveil the position of the company regarding ability to continue as a business.
Okay.
So if company management saying company is going concern, while auditor is having doubts about going concern, while evaluating management ability to continue as a going concern, he should take some evidence. What kind of evidence? Cash and profit projection.
Okay.
Cash and profit projection for next 12 months. We will ask the management, please provide us your cash and profit projection for next 12 months. Auditor will see whether there are chances of recovery in future, improvement in future or not.
Okay.
Auditor should review latest management accounts. Management accounts mean budgets, whether company budgets mean future planning showing any chance of improvement in future or not. Auditor should review customer contract.
Okay.
Customer contract or order book in post balance sheet period, post year end period, mean if we are performing audit of financial statements of 31st December 2023, this period after the year end is called post year end period. We will see there whether company is receiving a big order from the customer, having a big contract with the customer, mean there will be chances of recovery in future. Company is going concern, but if company is not receiving any big order from the customer, no having any big contract with the customer, mean company is not going concern. If management saying we can obtain loan from the bank to resolve this cash flow issue, going concern issue, we should take independent confirmation.
Okay.
Independent confirmation from home, from bank, to ensure continuous support from them. How many chances are there that you will provide a loan to the company. If they are saying there are high chances we are in finalization, this means company is going to sign. If they say no, we will not provide a loan to this kind of company. We are not caring about this company because it's having no proper cash flows, not having the covenants meet by the law. So this means company is not going to sign. We should also evaluate correspondence. Correspondence means communication with the supplier, whether they are continuing support on credit to this company or not. Because if company is having issues, normally suppliers stop providing stock on credit, and this can further affect the going concern position. We should review board minutes latest. Board minutes. What is meant by board minutes?
The writings when you take.
Directors meeting minutes.
Yes.
To see how they consider the event.
Yes.
How they consider the
Event.
going concern, because through their discussion we will be able to identify whether their discussion showing company is going concern or not.
Okay.
So if auditor is having doubts about going concern, he should seek some evidence as per ISA 570. If examiner asks about evidence, we need to provide document that should be in your working paper. Cash and profit projection for next foreseeable future to see any chance of recovery in future. Latest management accounts, this is a document to see any chance of recovery in future. Customer contract order book in post year end period to see company is receiving big order from the company to recover its position. This is called document with evidence. Independent confirmation from bank, that is confirmation letter from the bank to continue support. This is evidence document. Correspondence with the supplier to see any continuous support from the supplier. This is document called evidence. Latest board minutes, this is document that will be in working paper to see whether how they are considering the event. If examiner asks about evidence, you need to name the document that are in your working paper. And these are all documents. Sometimes examiner asks, you are having doubts about going concern.
Okay.
Please write down the procedures to clarify your doubts. Or what are the procedures that auditor should perform regarding checking going concern assumption.
Okay.
Then we need to add some word of procedure along with them. Instead of saying cash and profit projection, we will say evaluate or review or inspect cash and profit projection for next foreseeable future. That is called procedure.
Okay.
Review latest management accounts to see any chance of recovery in future. That is called procedure. Inspection of customer contract order book in post balance sheet period to see any chance of recovery in future. That is called procedures. Obtain independent confirmation from bank to ensure continuous support. That is called procedures. Review correspondence with the supplier to see any chance of support from supplier. That is called procedures.
Okay.
Review latest board minutes to see how management considering the event through their discussion. That is called procedure.
Okay.
But if examiner asks about evidence, then please don't attempt these words with the sentence. Your sentence should start from the name of a document that are in your work paper.
Okay.
This is very important distinction between evidence and procedure, because normally what students do, they write evidence if examiner asks about procedure.
Okay.
And they write procedure if examiner asks about evidence.
Oh.
And this paper, about 20 marks, are relating to evidence and procedures, and it is very important to distinguish between these two, procedure and evidence. Procedure mean auditor action. Action mean auditor, procedure mean how auditor checking different documents, how auditor checking different things. Evidence mean outcome of your action. That is in your working paper. What is in your working paper? Different documents. So if example asks about evidence, name the documents that are in your working paper. And example asks about procedure, write down the action. Review something, inspect something, obtain something, evaluate something, check something. Is that fine?
Yes.
So regarding going concern, company management is having some responsibility for IS 1 and auditor having some responsibility for ISA 570. Now we are moving towards reporting effect of going concern. If company is going concern and company management have prepared financial statements on going concern basis, what should be your audit report? If company is going concern and company management have prepared financial statements on going concern basis, is that everything okay?
Yes.
So we will issue unqualified opinion.
Okay.
Is that fine?
Yes.
If company is not going concern,
Then it will be on breakup.
if company is not going concern,
Yes.
financial statements should be prepared on breakup basis.
Yes.
But
Liquidation.
management has prepared financial statements on going concern basis.
Okay.
In that case, whole financial statements are wrong.
Oh.
Because all the non-current assets should have been recorded as current, but not. This means whole financial statements are wrong. In that case, we will issue adverse opinion, mean financial statements do not give current value as a whole.
Adverse opinion.
Is that fine?
Yes.
If company is not going concern, what accounting standard says financial statements should be prepared on breakup basis. Yes, management has prepared financial statements on breakup basis. This means financial statements give true and fair view mean we will express unqualified opinion. But financial statements have been prepared on breakup basis. Is that important from the shareholder point of view? We will highlight this by including emphasis of matter paragraph in the audit report, like financial statements prepare true and fair as per standard, but they have been prepared on a breakup basis. We will highlight this for shareholder point of view through emphasis of matter paragraph.
Okay.
So if company is going concern, financial statements have been prepared on going concern basis, we will issue unqualified opinion. If company is not going concern, this is the case. In using the going concern basis of accounting is not appropriate, mean company is not going concern. Financial statements prepared on going concern basis, we will issue adverse opinion, adverse report. But if company is not going concern and financial statements prepared on breakup basis, we will issue unqualified opinion with emphasis of matter paragraph to highlight that financial statements have been prepared on breakup basis for whom? For shareholder.
Okay.
Now we are discussing if company is going concern, but there is a material uncertainty exists, mean there is a cash flow issue that IAS 1 required should be disclosed in the financial statement.
Yes.
We prepare financial statements on going concern basis, but provide a disclosure into the financial statements that companies are having this cash flow issues that will be resolved in near future.
Okay.
So company is going concern, but there is material uncertainty exists with cash flow issue. Financial statement has been prepared on the going concern basis with our disclosure of cash flow issue. This means financial statements are accurate or not?
It will be whole wrong.
If there is cash flow issue,
Yeah.
IAS 1 says prepare financial statements on going concern basis, but provide a disclosure of cash flow issue. So company has prepared financial statements on going concern basis and included our disclosure of cash flow because there is cash flow issue.
Yes.
So financial statements are accurate. We will issue unqualified, unmodified opinion. But we will highlight this cash flow issue into the audit report. How we can highlight any issue of financial statements in audit report? Through emphasis of matter paragraph. You know?
Yes.
But here we will not include emphasis of matter paragraph. Instead of emphasis of matter paragraph, we will include a paragraph called material uncertainty relating to going concern in the audit report. This is very, very, very important paragraph.
Material uncertainty. Yes, sir.
I'm explaining the scenario again.
Yeah.
Company is going concern, but company is having cash flow issue.
Okay.
IAS 1 says if you are having cash flow issue,
You must
prepare financial statements on going concern basis, but
yes.
must disclose this issue in the notes to the accounts.
Yes. Highlighted. Yes.
So company management has prepared financial statements on going concern basis and has disclosed the cash flow issue in the financial statements as per standard.
Okay.
This means financial statements are okay as per standard.
Yeah.
We will say financial statements give true and fair view. We will issue unqualified, unmodified opinion in favor of company.
Okay.
But this cash flow issue disclosure is important from shareholder point of view. And we need to highlight in the audit report from shareholder point of view. Normally, we highlight financial statements matter to shareholder in the audit report through emphasis of matter. But to highlight this cash flow issue disclosure, we should include not emphasis of matter. We will include a new paragraph in the audit report that will be called material uncertainty relating to going concern paragraph.
Okay.
Only in this case, this paragraph will be included in the audit report. Otherwise, never ever this paragraph will come in the audit report. When material uncertainty relating to going concern paragraph should be included in the audit report. When there is an accurately disclosed cash flow issue in the financial statement. If company is having cash flow issue, it should be disclosed in the financial statements. Management didn't disclose the cash flow issue in the financial statement. Are the financial statements accurate or wrong? If there is cash flow issue,
yeah,
that should be disclosed in the financial statements. But management didn't disclose in the financial statement. Are the financial statements accurate or wrong?
It's wrong.
Wrong. It's not prepared as per accounting standard.
Yes.
Are the whole financial statement is wrong or some part of the financial statement is wrong?
Whole.
Not. Only one disclosure is not there, everything else is fine.
Oh, but
in that case, matter is material, not pervasive.
Material.
So we will issue qualified opinion with except for. And we will highlight the issue in basis for qualified opinion.
Okay.
If companies are not going concern, standard required financial statement should be prepared on breakup basis.
Yes.
And company management haven't prepared on breakup basis, that is pervasive nature matter. Whole financial statements are wrong. Because all the non-current assets should be disclosed as current, but not this means whole financial statements are wrong. All the non-current liabilities are wrong.
Now I get it. I get it. Yes.
That's why we consider it pervasive. And in that case, we issued adverse opinion.
Yeah. Okay. Now I get it. Yes.
If there is cash flow issue, that is not pervasive nature.
Okay.
Only one disclosure is required. If it is there, it's fine. If it's not there, then its material nature misstatement rather than pervasive nature, and we will issue qualified report rather than adverse.
Okay.
I'm summing up again this reporting effect.
Yes.
First, if company is going concern, management has prepared financial statements on going concern basis. We will issue unqualified opinion, everything is okay.
Yes.
Now moving towards these four reporting effect. Company is not going concern. Financial statements prepared on going concern basis. This means whole financial statements are wrong. Because if company is not going concern, they should prepare on breakup basis. If they did not prepare on breakup basis, whole financial statements are wrong, we will issue adverse report. The second scenario, if company is not going concern and management has prepared financial statements on breakup basis, liquidation basis. Because accounting standard says, so financial statements are accurate. We will issue unqualified opinion, financial statements give to and fair view. But financial statements has been paid on breakup basis. This is important from shareholder point of view. So we will highlight through including emphasis of matter paragraph in the audit report. In that case, we will issue unqualified opinion with emphasis of matter paragraph. Now we are moving towards companies having cash flow issue, mean material uncertainty existed. IAS says if companies are having cash flow issue, not going concern, cash flow issue, mean minor issue that can be resolved within a year. Company can continue its business for more than 1 year, but there is cash flow issue. You should disclose in the financial statement. So companies having cash flow issue. While preparing financial statements, management has provided adequate disclosure. This means financial statements are accurate. We will issue unqualified opinion. When financial statements give true and fair view and are prepared according to accounting standards. But we should highlight this cash flow issue available in the financial statements. How we will highlight for this? We will not use the basis of matter paragraph. We will use material uncertainty relating to going concern paragraph. Material uncertainty relating to going concern paragraph. MURGC. MUR material uncertainty relating to going concern paragraph. Only in this case, this paragraph will be in the audit report when there is correctly disclosed cash flow issue in the financial statement. If companies having cash flow issues, that must be disclosed in the financial statement, but management didn't disclose it. Then we will issue qualified report. We will issue qualified report because this matter is material rather than pervasive, because only one disclosure is not there. Except for material uncertainty disclosure, financial statements give to and fair. Is it fine?
Yes.
So we have discussed about two standards. Where this material uncertainty paragraph should be included in the audit report, what is the placement of this? Title, opinion, basis for opinion, can, other information. These are the contents of audit report in it. Management responsibility, auditor's responsibility, other reporting, auditor name, signature. Where emphasis of matter will normally include before can. Where other matter will normally include after can. So where this material uncertainty paragraph should be included in the audit report, where the emphasis of matter we include mean before can, it should be there. Normally we highlight matters relating to financial statements through effaces of matter paragraph. But regarding this cash flow issue disclosure, we will not use effaces of matter. Instead, we will use material uncertainty relating to going concern paragraph.
Okay.
Only in this case, this paragraph will be included in the audit report. Otherwise, it will never ever be used in the audit report. So when we should use material uncertainty related to going concern paragraph in the audit report, when there is a correctly disclosed cash flow issue in the financial statement. Mean there is issue, standard required disclosure, management has provided the disclosure. If there is a required disclosure, management haven't provided the disclosure, we will not include this paragraph, we will qualify the audit report. Because financial statements are not accurate, not as per standard.
Okay.
Can you understand this point?
Yes.
So we have covered two auditing standard, ISA 580 and ISA 570 going concern.
Yes. 570.
So